Welcome to Stocks Review. Inflation rate is reaching a multi-year high. What should we do to preserve or grow our wealth in such an environment? Let us take a look at the components of Consumer Price Index. Housing and food combined takes up over half of the amount. If we can find something that has both real estate and food sector exposure, then it might be a good investment to hedge the inflation. Therefore, a farmland REIT may be a good investment choice in this scenario. Today we are going to take a look at Gladstone Land Corporation. Stock ticker symbol LAND. It is headquartered in the USA and service regions only in the USA. It has a market cap of $844 million and is considered a small cap company. It is in the real estate sector and REIT industry. Gladstone is a publicly traded real estate investment trust that acquires and owns farmland and farm-related properties located in major agricultural markets in the U.S. and leases its properties to unrelated third-party farmers. The company, which reports the aggregate fair value of its farmland holdings on a quarterly basis, currently owns 127 farms, comprised of approximately 94,000 acres in 13 different states, valued at approximately $1.0 billion. Gladstone Land's farms are predominantly located in regions where its tenants are able to grow fresh produce annual row crops, such as berries and vegetables, which are generally planted and harvested annually. The company also owns farms growing permanent crops, such as almonds, apples, figs, olives, pistachios, and other orchards, as well as blueberry groves and vineyards, which are generally planted every 10 to 20 plus years and harvested annually. The company may also acquire property related to farming, such as cooling facilities, processing buildings, packaging facilities, and distribution centers. The company pays monthly distributions to its stockholders and has paid 93 consecutive monthly cash distributions on its common stock since its initial public offering in January 2013. In short, it is a farm REIT. It has a 5-year compound annual revenue growth rate of 34%. The revenue growth is consistent and the revenue trend looks very strong. The revenue trend is important as growing companies often have sales go up first followed by profit growth. On the other hand, when sales become stagnant, it may also give us a hint that the growth phase of the company may come to an end if no critical change is made. The operating income is growing. It has been issuing more shares in the recent years, probably to fund its growth. We should always follow closely if a company is buying back or issuing more shares, as both of these activities greatly impact the return shareholders can get. It has a nice dividend and has been steadily growing its dividend throughout the years. The dividend history gives us a peek of a company's cash flow stability. The overall shareholder return of Gladstone Land Corporation is in line with the historical performance of the SPY. The total return and annual growth rate history of a company can show us what the performance trend was and how it had navigated through difficult times. Most companies tend to perform similarly with a slight decline in growth as time goes by. Gladstone Land Corporation has a 9-year total return of 250% with a 9-year compound annual growth rate of 10.7%. If you had $1,000 invested 9 years ago, you would have $2,500 now. Currently, the price is at around 25 with a 52-week high at 42 and 52-week low at 21. It is near the lower end of its 52-week range. It has a price to AFFO ratio of 32.5 and forward price to AFFO ratio of 32.3. It has a cash position of $49 million and long-term liabilities of around $737 million. The ratio of cash, debt, and market cap may help us evaluate the default or bankruptcy risk and what percent of your share is eroded by debt. Higher debt also has a higher cost in an elevated interest environment. Gladstone Land Corporation is considered a no-moat company according to Morningstar's rating. Currently, the margin is 5.2% and future margin after 5 years is expected to be minus 4.4%. The margin is expected to be declining after 5 years. The company's margin and moat reflects the pricing power of the company, and the projected trend is also important. We want to own a company that is able to stay profitable and relevant. Now, about the future projection. It has a 5-year forecast revenue compound annual growth rate of 17% and 5-year forecast EPS compound annual growth rate of -8%. The near-term growth is expected to be good. It has equal beats and misses of analyst consensus EPS estimates in the last 4 quarters. The performance is average. The overall analyst recommendation rating is a buy with trend shifting towards buy recently. The rating trend gives us a clue of the changes of what analysts thought about the stock. Out of 7 analyst 1-year price targets, the range is 29 to 40 with an average price of 33, which is well above the current stock price. Since Gladstone is a REIT, we present 2 models for valuation based on book value and adjusted funds from operation. If we run the book value model, the fair price is 30 with an upside of 16%. If we run the adjusted funds from operation model, the fair price is 21 with a downside of 26%. Now we compare Gladstone Land Corporation with U.S. Treasuries and SPY. It cannot be emphasized more that the U.S. 10-year Treasury yield is one of the most important numbers to keep in mind when investing in stocks. Currently, the 10-year Treasury yield is around 2.85%. The SPY is considered one of the safest and most liquid ETF for investing in the stock market. The return yield of SPY is at around 10%. The SPY has an average forward PE around 16.5 now. Gladstone Land Corporation has a dividend plus 10-year growth forecast plus shares buyback yield at 8.6% and a price to AFFO ratio around 32.3. We have to be cautious that this is just a rough prediction of Gladstone Land Corporation's future performance. The forecast can be changed at any time and the actual revenue or net income the company is able to get depends heavily on the true market condition. Looks like Gladstone Land Corporation is more expensive than the SPY and SPY looks like a better buy with a more stable return estimate. We will try to summarize all the information above to give us an overall impression of Gladstone Land Corporation. In summary, Gladstone Land Corporation is a small-cap high-debt company with small growth and no moat, and probably overvalued now. Farmland is considered an inflation hedge with yield, however, the expansion in growth is small when share dilution is taken into account. Gladstone Land Corporation may be a good investment for inflation hedge if inflation continues. The best time to buy Gladstone is probably when inflation is low. Now that's a review for Gladstone Land Corporation stock. Click the subscribe button for more up-to-date stocks review. If you like our content, leave us a comment and click the like button to give us some support. We hope to see you next time.